Hello, everyone. Welcome back to the Trade Informer podcast. Again, we're doing things a bit differently this time. Today, we're in Cyprus, we're in Limassol, and I'm talking to Konstantin Shulga, who is the CEO and founder of Finery Markets, which is a crypto ECN, if that's the correct phrase to use. So we'll be talking about that. But maybe to give some background before we start talking about why I wanted to do this, I would say in the past 6 to 12 months, just a few companies like Finery have kind of come onto my horizon, and conceptually, I just find it quite interesting. So, why there's the need for it, and I'm sure we'll sort of get into that as well. But maybe just to kick things off, maybe you can talk about what the company does, yourself, why you founded the company, all those sorts of things.
Sure, and thank you. It's a pleasure to be here. So I'll start with the quick intro on my side. I've spent 16 years in electronic markets, having pleasure of working across FX, equities, and fixed income. And actually, for the last 16 years, I saw how all the markets developed around those areas. So together with my co-founders, we just saw the new asset class emerging. And this is really one of once-in-a-lifetime opportunity, because you won't see a new asset class appearing like every decade.
Yeah.
But that's exactly what we saw. And still, while we were being kind of quite, I would say, young and ambitious, we decided, why don't we move from the traditional space, bring some of the best practices, and try to build some of the proper institutional parts of that infrastructure within the digital asset space, and also bring some of the innovative practices of the digital space here.
Okay, so this is maybe a brief question, but one of the things I'm curious about is if I speak to a lot of people who come from, let's say, more traditional financial background, or even people who are in, say, the brokerage industry, I think a lot of them take the approach of, it's almost like they have crypto or have a crypto product, not because they necessarily believe in it, but just because, the client wants it, and if it works, that's great. But if it doesn't work, who cares as well? Whereas I would assume if you're starting a company like this, you must have some genuine belief or interest in the underlying product. Otherwise,
Exactly.
You probably wouldn't start this company. So, I mean, from my point of view, I'm quite skeptical about crypto. I think there's one of the main use cases that I see is actually more about people who live in, let's say, a country of capital controls, and it gives them easier access to the global financial markets. But aside from that, I don't know. I'm still a bit skeptical about it. I'm kind of more in that former camp.
Then we have a perfect setting for the podcast, right? So we'll have an interesting conversation today, I guess.
Yeah.
Answering the question is, Finery Markets started as a crypto native ECN. So we didn't have clients that were doing like FX or equities that were asking for crypto. So we started crypto day one, and purely because we had this feeling that this is definitely a new asset class that it's not only emerging, but it's going to stay for quite some time. And back 5 years ago, it wasn't that obvious, especially on the institutional side of things, because from day one, we wanted to build products for institutional clients. There was not a lot of people with traditional background like myself and my co-founders there. And it wasn't that obvious, but today we see guys like BlackRock, State Street, BNY are all there. So it seems we've made the right bet and the right guess. So most of those institutions are coming into the space.
Yeah.
That's basically the main belief. And then probably answering your question, what are the real world use cases, right? Like what are actually people doing there? Because there's definitely a certain component of some illicit activities. And addressing that point, I think probably 10 years ago, it was more of a Wild West. Today, we all see the data and research from Chainalysis, one of the largest on-chain data service providers. So what they say and what their data shows is that every year, then the percentage of illicit activity within the crypto space, it just drops by almost 50% every year. And I think according to their 2023 report, it's less than half of the percentage of all the crypto trading activity and transactions is now related somehow to illicit activity. So I think that's a proper positive sign. Then at 99 6% of all the crypto activity and all the crypto transactions are actually not related to any illicit activity, and happy to chat what is that all about.
Yeah. I mean, so then what sort of things do you see the asset class being used for? Because again, from my point of view, I think, let's say you're someone in Vietnam or Nigeria or Argentina. So I actually met someone about a month ago, a Nigerian guy. He lives in the UK and he uses it to uses Tether to basically send money back to his relatives because it's much easier than using the regular banking system. The thing that I find interesting about that is that that to me is less about crypto as being a good asset class and more about people who have been shut out in some way of the financial system. So do you see my point? It's like less about the sort of technology than it is about the fact that...
Well, it's still the technology, because the technology allows you to have like a more efficient, cheaper and faster rails. Because we as a company, we also pay salaries to our employees, not only in, let's say, somewhere in Nigeria, but we have some contractors in the US. Yeah. We also pay them in crypto because it's just cheaper and more efficient for us to pay them. And yeah, to your point, it's not because people want to invest in crypto. It's because crypto offers all of the efficiencies of the on and off ramp and just money movement and remittance. And this is one of the most proper real world use cases within the crypto space.
Yeah.
And I would probably, if like speaking broader, what are the top 3 use cases out there is number one, is still probably a lot of speculation. It's just like some individual clients trying to get rich fast. And I think it will always be there. And the same way as it's in equities or like people trying to trade gold because just they want to get rich. And crypto with its volatility offers that opportunity. So it'll be there for some time, and probably the percentage of that use case will be slightly decreasing. Then the second use case, it's more on the institutional side. It's the inflation hedge. And the whole idea of the Bitcoin, it's actually like what's mentioned in the white paper, is the limited supply. And I think this is already like a properly acknowledged use case on the institutional level with BlackRock's, like guys like BlackRock issuing ETFs. And then the third part, it's something that you made your point on this Nigerian individual, is money remittance business. And this is going also quite huge with a lot of institutional regulated companies like electronic money institutions, banks like Revolut or some other guys also applying for crypto licenses because they want to power not only the speculative part, but also utilize the payment component, or like PayPal, for example.
Yeah. Okay. Well, moving on to more about what you guys do. So I think from my point of view, something I find interesting about crypto is that if you look at the way the market infrastructure developed, it's kind of unique in the sense that it sort of started with retail. Again, this is my perception of it. So you have a sort of retail model as opposed to, I think if you look at, say, exchange models for equities, it's very much like you build for financial institutions, and then you kind of have almost like an add-on. At least I'm thinking of, say, how the London Stock Exchange works. It's almost like an add-on for retail participants. Whereas this is kind of like the other way around.
Exactly.
And then another facet of that is it seems like if you looked at companies that called themselves exchanges in the past, you know, like I remember buying Bitcoin probably almost 10 years ago, maybe. No, maybe it was not so 10 years. Anyway, it was at Coinbase. And I remember thinking like the way that transaction was structured is it didn't seem like they were matching there was my order and then they're kind of matching it with the seller. It just felt like they were probably market making. I don't know if that was actually the case. But again, that to me is like kind of a weird feature of a lot of crypto is that, so you have, on the one hand, it was very much built for retail. And then the other part is that you have people that call themselves exchanges, but actually a lot of the time it felt like they were operating an exchange, but also market making themselves on that exchange, which I think is pretty unusual. So is that the case? You think that's a fair description of...
The weirdest part of that is that even though a lot of companies still call themselves exchanges, they even don't have the exchange component itself. They have the function of exchanging one asset to another, but they might not have their own matching engine because this might be just like facing directly their market maker, or not their market maker, but some affiliated market maker. So those cases are still out there, especially with some of the offshore exchanges. And I think even like 5-10 years from now, we'll probably still see some of them. Like we do have some like CFD brokers that probably do quite the same thing, even though they don't call themselves exchanges, they call themselves brokers, even though they're not really brokers, they're more of a market makers, right? So like we do have the same thing in crypto today, but what we see, especially over the last 3 years, is with more regulation, we see local players appearing everywhere, like Europe, APAC, US, where a proper deep bundling is happening, where exchanges are operating exchange function, and then the market making function is separated from that. So yeah, the market is changing, and it's just great to be once again in that moment in time where we see this new asset class not only emerging, but also adopting some of the best practices from traditional space, because all of those practices were there for a reason. Like if you're not able, like regulatory wise, run an exchange and a market making firm from the same fund, that's there for a reason, just to eliminate the conflict of interest. So yeah, I think FTX was one of the best things that happened to industry for people to basically like wake up and see, wow, probably that's not how the things should work. And we were preaching for that from day one. And when we were pitching to certain crypto native clients 4 years ago, they were saying like, we don't need an ECN. Like we can trade on Binance, FTX, or whatever, because it's a one-stop shop. It's nice and easy. And 2 years from that, they were coming to us because they remembered the story that we offer like no conflict of risk. We offer a pure infrastructure of matching without touching clearing or custody or participating in any of the funds flow. So I think that's what people appreciate, especially over like a proper period of time.
Yeah. We'll get into more of those details in a second. But one of the things, again, looking at it from the outside, that I always thought was like, if you were a big financial institution and you were trying to, let's say you were just on Binance or something, and you were trying to do any kind of large size order, then you probably wouldn't, I mean, you would just be trading against retail like, wouldn't the large majority just be retail clients doing small orders? And if you were putting any kind of large ticket size, you would just be hitting like, yeah. And so you would get an absolutely terrible price and like all this kind of stuff.
Exactly, even on Binance, because even like today, and we did some research, Binance is still the price discovery venue within the crypto space for most of the cases, especially on like tick by tick basis. So, but even the size of Binance doesn't offer the proper depth of liquidity for certain large institutional customers. And that's why we have the whole era of institutional solutions like brokers, ECNs appearing in the space. So yeah, back to your point, Binance might not be the best fit for someone like an ETF issuer trying to do their rebalance, because it's not only the retail. I think probably 80% to 90% of the Binance volume is more on the algorithmic high-frequency trading side of things. So you face against retail plus a lot of different HFT guys that whenever you might see like a big order going into their direction, they might disappear. So you'll end up with pretty bad market impact.
Yeah. And so, I mean, going more into what Finery does specifically, my impression is that you guys, and again, there's probably two or three other firms doing somewhat similar things, is that it's almost like Fast Match was for FX in terms of creating a kind of venue where you can, I guess, price more efficiently and film orders more sort of securely. I mean, is that a good comparison, do you think, or is it different?
Yeah, well, I mean, ECNs and FX, like we didn't develop or create the idea of an ECN. So it's a well-developed idea. And even more so, one of our investors, it's a fund called Communities Capital, which is run by 3 partners. One of them is ex-CEO of Instanet. And Instanet is the developer of world's first ECN. within the equity space, even though equities market is slightly, it was more of an exchange driven. FX market was always bank driven. Like it appeared and it emerged from the banks being the largest dealers, the largest market makers. And then when the electronification of the industry arrived, we then saw more multi-dealer platforms or ECNs. Excuse me. So the idea of the ECN, actually, we were encouraged and inspired by someone like FastMatch, EBS, or like FX All within the FX industry, than someone like Instinet or Archipelago in the equity space, as well as like TradeWeb or Market Access within fixed income. Yeah. So I would say Finery Markets is a blend of like those names and concepts with a few new flavors, which you mentioned. Like we have a couple of peers in the market, and we're very happy that they entered the space because we've been there for like alone for quite some time. Now we're driving all of that together. And I mean, the market is growing, so that's great. But the thing, what is different in the crypto space is in traditional markets, especially in FX, we see the granularity of infrastructure at a way different level compared to crypto. So what I'm telling is that ECN in FX is a pure like matching engine. So you basically don't have any sophisticated risk management functions, or there's no way to track the balances and positions, because for every certain part of the infrastructure, you already have an established player. In crypto, that's not the case, because crypto infrastructure is just developing itself right now. So when we first started back in 2019, we faced those challenges that we cannot just be the like traditional ECN, like a fast match, right? We need to also help our clients do the proper position management, reporting. So we developed, I would say, a more advanced version of an ECN that at its core has a proprietary low latency matching engine, which is our, I would say, like state-of-the-art product. But then in addition to that, unlike traditional ECNs, we also do the pre-trading and post-trading parts that help cover the entire trade life cycle for our clients and partners.
Okay, so in practical terms, if I want to use you guys as, let's say I'm let's say I'm a CFD broker who wants to hedge out their risk in some way using you guys.
Yeah.
Do they face a PB that is then working with you guys? Is that how it sort of functions?
Yeah. They might face a prime broker.
Yeah.
The question is for most of the exchanges that the forex brokers are using, they're using bridges to connect to them.
Yeah.
Most of those bridges, they don't support and they don't allow like data reconciliation. So when you're trading on, let's say, a few exchanges, you need to have a separate pipe for reconciliation and collecting all of those trade reports and some positions. And it generally becomes quite messy on the reconciliation side. Yeah. So what we allow them, those brokers, to do is they can face Finery Markets. And then if they trade with 1,000 different LPs, then they can use Finery Markets also as a golden source for trade reconciliation and their positions. So they see all of their net open positions against each and every liquidity provider within Finery Markets. Even though we're not touching the funds themselves, but we just provide a more efficient way for them to reconcile their data and trade reporting.
Yeah, okay. Maybe this is a kind of dumb or simple question, but let's say I am today one of these companies. It could be CFDs, it could be someone completely different. And I am currently facing an exchange to do whatever kind of trading I want. And then I go, okay, actually, I want to go with Finery. Yep. In practical terms, what is purely on a sort of trading basis? Is it basically just pricing and then there's sort of firm pricing as well? So they go, okay, I know I'm going to get a better price than if I was with, again, let's say Binance. I'm not dumping on them then by saying that, but just as an example. So I'm going with Binance or I go with Finery, and I know, okay, if I go with Finery, I will see price improvement of X. And I also know that if I trade in a larger ticket size, I'm going to get firm pricing. I'm not going to get sweep order books sort of thing. Yeah.
Well, I think being fair, Binance does offer firm pricing. So I don't think at their scale ever client really compared about the prices not being firm. If we're not talking about like a $1+ million clip, that probably most retail brokers, they just don't touch those type of orders. What's the main difference is that on the pricing side, the clients can trade like a wide range of coins with the firm price and deeper liquidity if they need to. Then they make sure that the liquidity they face will not disappear when the markets are volatile or when they have like more one-sided flow. And that's one thing. The second thing is the efficiency of their like treasury management, because if they're facing an exchange, they basically need to pre-fund with that exchange. And they might need to face like several exchanges to cover their needs on the assets and the coin side. They might want to go short, while like most exchanges, they don't really have a proper like collateral management system for that. So on Finery Markets, it's also T+1 or T+2, depending on the agreements with your liquidity providers. So it's a more capital efficient model where you can execute and then do the post-trade settlement. And then there's also a counterparty risk. So on Binance or any centralized exchange, you don't really know even sometimes what legal entity you're facing. On Finery Markets, you have either a prime broker, which is regulated and well-established, or you can directly face a bunch of liquidity providers that are also regulated, and you know exactly like what is that entity, what's their financials.
Yeah. And so what sort of companies are coming to you guys at the moment? Because again, if I put my skeptic hat back on, one of the things I'm sort of curious about is if you look at, say, if I took the FX markets or if I took equities, I can see in the FX markets where the flow would come from, right? There's so much demand for swapping one currency for another. If I look at, say, the equities market, if you look at, say, the retail market of that, it's obviously a tiny proportion in most cases of the overall size of the market. So if I then think of, say, apply this to crypto, I go, okay, I can see where all the retail demand is, because it's basically just people that, in most cases, it seems like they want to speculate, or they're just really fanatical about something like Bitcoin. And I suppose on the institutional side, you mentioned, say, an ETF issuer, but it just seems like that component still isn't really there. It's from the outside. Yep. So am I wrong, or is that changing, do you think?
Well, first, I think the GameStop crowd will not agree with you on their like minimal impact compared to the institutional investors, because I think what Robinhood did, and we had electronic trading in retail for decades in the US, but I think what Robinhood did was really revolutionary, is they brought a new generation of retail investors. And I think right now it's quite substantial, especially in the US equities market, when the influence of retail investors is becoming more and more.
Yeah.
And in crypto space right now, I think it's the other way around. So for now, there's more retail clients that are driving the demand, and then a lot of the institutional firms, especially algorithmic trading firms, they're just trying to capture that retail flow. But once again, this year, I think, was like a pivotal year for the industry with the appearance of the ETF issuers. And then I think that really makes a big difference. So now we have a proper blend of retail flow plus the buy side, like the proper directional long-only firms, and also a bunch of algorithmic trading firms and strategies doing their thing with making the markets more efficient.
Yeah. So are you seeing, are you seeing a kind of mix now of people that are coming to you? Because if I think of, like from my point of view, if you look again at I'm thinking more on the kind of PB side, actually. There's one PB, and who's specializing, which you're probably familiar with, who's kind of specializing in this sector. And my sense was that the concept there was like, they'll go to primarily CFD people, again, that was my perception. And they would go, okay, rather than facing whatever 8 different LPs, come to us, and then we'll plug you into, and you just have one account, and it makes things much easier for you. But that's quite a specific client base, and I would imagine you want a broader client base than that. So are you seeing that, or is it?
So I think there are a few different use cases, and going back to the use cases I mentioned in the beginning, right? So there is a speculative part, and a lot of retail clients are going to CFD brokers, or they're going to crypto native brokers. So that's our client base. We do face the sell side working with both retail and institutional clients. They're willing to provide their clients with access to crypto trading, and they're not willing to take the risks of centralized offshore exchanges. So that's one thing. And I think that segment is still kind of relatively small. It is growing. And I think more trading volume right now is not going through the CFD brokers, but through the crypto native brokers. So those that started within the crypto space, they already gained some traction, they gained some client base. There's definitely going to be a consolidation in the market. So we already saw a few CFD brokers buying out those crypto native ones. So there will be more consolidation there, but that segment overall will continue to grow. Yeah. And like one of the recent examples is I think the deal is not closed yet with Robinhood buying Bitstamp. Yeah. This is just part of that process where we have traditional players trying to acquire the crypto native ones. So that part we serve, and by sell side, I also mean centralized exchanges. So imagine there's actually a huge niche where today we have a few hundred so-called exchanges, and most of them actually do operate their matching engine and their own central limit order book. And the way they do it in most of the cases is they either build it themselves, but that's not the option for most of the players. They go out and buy some white label technology or infrastructure, and they end up using basically an empty order book. So they purchased it, and it's quite expensive. So they've purchased this order book, and now they have this chicken and egg issue of where will liquidity come from? Because the client will not be willing to trade an empty order book. So now they either build their own market maker, and they might act quite, I would say, they will not do something illicit, but they just need to solve this chicken and egg problem. So they either plug, let's say, into Binance, and then they just mirror the orders from Binance to their own exchange. And this is an ideal client case for Finery Markets, because we do serve some of those market makers that just mirror the orders from our firm order book, and they place it into their book, power their client trading. So that's one use case. The second use case is that for certain exchanges, we just go out and tell them, guys, you don't need to run a separated order book. Like what you do and what you can do, you specialize in working with retail clients. You know how to talk with those clients on a proper language, especially if they have a local regulation. So we just tell them, why don't you completely get rid of your own matching engine and then just plug into Finery Markets so that you can hedge all of your clients' orders directly against the liquidity providers there. And that is a big growing market, which I think we'll see way more smaller exchanges realizing that it doesn't make any sense to maintain their own liquidity, their own order books, trying to compete unsuccessfully with the largest exchanges. So that's where we see the demand is coming from.
Yeah, interesting. And one of the things you mentioned at the beginning was the fact that you have this background in electronic markets and infrastructure, so working in equities, fixed income, FX. And one of the things that has been going on for ages now, I mean, basically since I started working, is this debate as to whether crypto is like a commodity or if it's a currency or if it's something, it's its own kind of niche or new asset class. But from your point of view as more, I suppose, more on the building blocks and infrastructure side, what do you think it looks like? I mean, are you having to create entirely new technology to deal with it as a product? Or do you just go, okay, here's the stuff that would work for building an ECN and FX. I can just basically replicate that model exactly and use it for crypto? Or are there kind of nuances to it that don't exist in another asset class?
Well, I don't have a clear answer about like the commodity versus equity, especially for something like Ethereum. I think it's quite unique. It's in its way, and it's hard. Like it has certain aspects of like either commodity or equity, but I think it deserves to be a separate asset class. Well, unlike Bitcoin, probably, which is more of a commodity thing from that perspective, and building any type of infrastructure within the crypto, it's like, I like this philosophical concept of creating or doing new things is just one of the later stages of learning. So every new product is a mix or like inspiration from some prior experience that you had. And that's exactly what we see in crypto today. So there's a bunch of FX components to that. There's a bunch of equity components. And it also depends on how many people from FX world are actually moving into the industry, because they bring their own knowledge and they make this industry look like FX industry. So today I think it's 70% FX and probably like 20% equities. But yeah, a lot of new things are also developing on the way. So it's always good to see how it's developing.
Cool. Well, maybe finish off. I mean, do you guys have any sort of interesting products or news or things on the horizon? Are there any kind of interesting things that you're working on at the moment?
So I think the most interesting thing, which last year we launched our FM liquidity match product, which we call also ECN as a service, and that allows us to create a network of connected liquidity pools that can be operated by separate brokers, or like they can create their own internalizing venues. They can operate their own exchanges, and that I think is the really powerful instrument that will drive Finery Markets and our client business within the next 3 to 5 years, is we want to allow local brokers, local exchanges who have the regulation to operate their liquidity pool, and then they can, within Finery Markets ecosystem, create different connections with other players. So it becomes like some client called us an AWS of matching engines. So that's I like that. I like that thing. And I think that's exactly what we're trying to build, is to connect those different liquidity pools together.
Yeah. Okay. Well, actually, maybe one more question as a follow-up to that would be, and again, this is sort of more theoretical, looking at things from the outside. But if there's a particular client that has, I'll give an example from the CFD world, which is, I was speaking to someone recently who runs more kind of a market maker.
Yep.
And they were saying they had one client who trades gold in like big sizes with them. And if they were basically passing through all of the flow, every time they did that, the client was trading in such large sizes, they would just get slipped. Like they were not deliberately, but they were just not getting the price that they wanted. And so they basically had to create almost like a custom pool of liquidity for this guy so that he could trade against them, and they could then hedge it out into the market in a way that would mean that he's getting the price he wants, but also they're not moving the market a lot. And so, I mean, can you guys do a similar thing? If someone comes to you and go, okay, we want to be able to trade, I don't know, Bitcoin, and we're going to be trading in these sort of sizes, we need to be able to hit a certain price, and we can't deal with slippage and so on. Can you then turn around to say the LPs who are on your platform and go, okay, this person needs this, and you can sort of come up with a solution for that?
Yes. So, and that's the power of ECNs. So this is exactly what we built, and that's why our technology is so sophisticated. Because if you look at the GUI and on the trading screen, like you might see this is a regular order book. But in fact, every client of Finery Markets, and today we have almost 150 institutional customers, they have their own order book. And that's what really adds up on the complexity of the things, because for every client, we need to calculate the pre-trade risk management and do the matching within our firm book, plus applying certain like tailored price trims from different liquidity providers, also allowing those liquidity providers to adjust their markups So yeah, answering your question, that's exactly what ECNs are for. And that's exactly what we do today with certain clients on Finery Markets by creating all of those different liquidity pools, private rooms, and allowing to actually customize the liquidity for them.
Cool. Well, that's super interesting. And it was very interesting speaking to you as well. So Konstantin, thanks very much for doing this. And hopefully we can try again in the future.
Definitely. Thank you. Enjoy Cyprus.